This came totally out of nowhere. Illuvium, or the ILV token, is suddenly up more than 65% in a single day, and the question is why? Who is buying here? Who's selling here? Does it still make sense to buy into Illuvium? Let's have a look at the data most people are not considering. Let's dive into the on-chain data. Now this is the performance today. But this month we have more than doubled. We are currently at $21.28. And interestingly enough, there aren't a lot of news around Illuvium right now. Yes, the Twitter account is celebrating potential new upcoming launches and improvements, but that's not really that noteworthy. It doesn't justify a doubling in a single month. Outside of Twitter, on different crypto news websites, we also don't find anything noteworthy that would justify the current rally. So something is going on here. Now this is not the first video on Illuvium on this channel. I published a video 3 years ago, 1092 days ago to be more exact, and the title of the thumbnail was "I do not Illuvium, why I stay away from ILV." And at the time this was a good call because the price continued to go down, and there was a good reason for that. It was token inflation. What we see over here is the number of circulating ILV tokens over time. At the time, the number of newly issued ILV tokens was pretty high, and the demand could not keep up with that additional supply. Thus, Illuvium tended to underperform Ethereum and Bitcoin most of the time. But that was the year 2022. It's not the case anymore today. We are now at the maximum supply of 10 million, and the Illuvium supply doesn't change anymore going forward. Here is the impact that this additional supply had on ILV. This is ILV now relative to Ethereum, and from the top at the end of 2021 to the price today, the token underperformed by more than 98%. And this wick here that we see at the end, that's the recent rally that everybody is interested in. Now there's also a vertical line over here. After that event in the middle of June of 2022, the Illuvium price crashed quite quickly, right? It stabilized a little bit, but then the down movement accelerated. And the reason for that was the staking program. Here is the single staking locked tokens, and that peaked in the middle of June of 2022. So while prior to that event, some ILV got locked up over time, supporting the price, that then stopped in the middle of 2022. All those locked tokens also hit the market, besides of course the token inflation, and that accelerated the decline even further. Now the question is this potentially the turnaround, or is this another pump and dump and we continue to see the long-term underperformance? The token inflation would not suggest that we're going to see more underperformance, right? Because there's no more additional tokens hitting the market. But what's actually causing this rally? Let's have a look at the trading volume. So there's 37 million worth of trading volume on the spot market in the last 24 hours. But there's much more trading volume on the perpetual futures market. Here we have 253 million on Binance. What's interesting though is that despite the recent rally, the funding rate did not turn massively negative. Most of the time it tends to be positive. It did move slightly negative, but it's nowhere near compared to what one might expect after a rally like this. Yes, many people got liquidated, mainly the shorts of course during that rally, but the trading volume is not particularly high, and the open interest on the perpetual futures is also not particularly high. So contrary to most of those pump and dumps, there seems to not necessarily be orchestrated through the perpetual futures. There seems to be some buying happening on the spot market. So it's potentially not just short-term capital that's getting in and then very quickly getting out again. This might actually be a fundamental turnaround. Now for me, this is too risky. I don't like this chart simply because of the long-term momentum. And if we draw our lines in the sand, which of course isn't really exact science, there are some wicks above and below, and we never know what's the best way to actually draw this. But if we just draw from the first top to the recent top, this doesn't necessarily look that great of a buy. But I'm also not shorting because, again, when I short altcoins, I want to bet on an increasing token supply. And we don't see this for Illuvium anymore. And we also don't see a lot of short-term price manipulation, at least on the perpetual futures market. If the open interest was suddenly to go to 100, 200, 300 million, things would be very different. It would be somewhat safe to bet on falling prices of ILV. But right now, this doesn't seem to be the case. Whoever is pushing up that price recently is doing so through the spot market. And in general, if purchases are done through the spot market, the investors tend to hold the asset for longer because it's expensive to buy through spot, right? There's all the spread involved. And the only reason to get exposed to that spread is if you have the intention to hold for longer, if you don't want to pay the high financing costs of perpetual futures. Now there's the approach to simply just buy into Bitcoin long term, right? To buy, say, once a month to dollar cost average in, say $1,000 every month. And that is a winning strategy because there is a lot of volatility, and the more volatile an asset is, the better it is suited for regular purchases. And had I done this, I would have gotten this light gray return. Instead, I outperformed just dollar cost averaging into Bitcoin. I got this black line in return. The Bitcoin maximalists say that we should forget about all of the altcoins and that Bitcoin outperforms the altcoins most of the time. Everything goes down against Bitcoin long term. So in the end, just stick with Bitcoin. That's what the maximalists say. But I think it's better to actually take advantage of this market asymmetry. Because while the Bitcoin maxis are right that most altcoins underperform Bitcoin most of the time, and that trying to find the next 10 or 100x meme coin is a losing battle long term, while this is true, we can still take advantage of that underperformance. The altcoins tend to do so poorly because of supply expansion. So users of the platform of the altcoin, or maybe the early investors in the token, or maybe the team, they get token unlocks. They get more and more tokens available over time, and they might dump those tokens on the market, depressing the price. For example, here, this is the circulating supply of the balancer token. It's a very typical DeFi token. We see this typically across the entire altcoin market. And if the supply grows faster than the demand, of course the price has to come down, at least relatively speaking. And so this is then the balancer price relative to Ethereum. It just goes down all the time. And we can flip this. We can take advantage of this. If we go long Ethereum and short balancer, or if we take out a loan in balancer, swap this into Ethereum, we get this return here. And that's how I made this outperformance over buying and holding Bitcoin. I shorted poor altcoins and went long Bitcoin, Ethereum, and Solana. And in this video, I actually want to share this for free over here. How can we get this kind of return? How did I achieve this kind of return in the past? There are several approaches, and I'm sharing now the one that I'm using for several years already. Go to the platform Aave. So that's aave.com and open the app. Over here, you can borrow several tokens. So you're providing some kind of collateral. It's a borrowing and lending platform. You provide collateral and then you can borrow against that collateral. And what you want to borrow is the balancer token, right? That's a token that tends to go down versus Ethereum all the time. Thus, if we borrow balancer, if you've got a loan in balancer, and we then swap that balancer versus Ethereum, and then we wait for balancer to continue to go down versus Ethereum, we suddenly have profit, right? Our loan, our debt is going down in value. Our asset is going up, relatively speaking. And then once we want to lock in our profit, we just pay back the loan with the appreciated asset. It doesn't cost much at all to borrow balancer. It's 0.31% per annum. Yet the price is going down so consistently. I made tutorial videos to the premium members about this strategy in detail in the past. And again, it was a very nice moneymaker. This is why people stay subscribed to premium, because the membership basically pays for itself if you've got some capital. But I found an approach that's even better, and that's currently my focus. I started this out 2.5 months ago. It's again relative valuation bets, but it's not with borrowing and lending platforms. It's instead with perpetual futures. I started with 40K, and then after 2.5 months, this turned into 60K, so 50% return. I don't expect that the growth rate will be that strong going forward, but still, I do think that in general, this is a winning strategy, right? Simply because the insiders, etc., they cash out over time, long term, and depress the price. The problem with perpetual futures is that we need to be very diligent around our risk management. We have to use very tight stop losses, and we then have to adjust those stop losses regularly. We have to find the asset that's most deflationary, that might have seen a short squeeze, etc. And while I'm sharing all the trades that I personally do, many people don't have the time to copy trade. And so I got asked regularly by the members, can't you just provide some kind of liquidity pool? We provide money to that pool and then you trade for us. And I finally started this just 2 days ago. It does not use Aave, it does not use borrowing and lending platforms. Instead, it uses Hyperliquid. And this is a tutorial video on how to use the Bitcoin strategy copy trading vault on Hyperliquid. So that's this platform over here. The platform is growing massively. So in less than a year, it attracted almost 2 billion worth of value. And I've created a vault, so a capital pool where the annual members of Bitcoin strategy can deposit to and then simply get the same kinds of returns. If you're just starting out and you've got some time and you don't have that much capital yet, then you can do this all manually, right? You can just go through the tutorials, you can watch them and then learn how to do this all yourself. I am sharing my own trades as well. And there are plenty of people that do this very successfully in the community. So if your crypto portfolio isn't yet $5,000 or $10,000, it's below that, then it makes sense to just go with the monthly membership and do the trading yourself. But if you don't have time, if you've maybe got a business to run and you've got way larger amounts to deal with, you don't want to hassle with all the risk management, etc., then the annual membership is for you. Because for the annual membership, where by the way, you're also saving a bit of money, you get access to the copy trading vault as well, with all the instructions on how to actually deposit your funds. And while I cannot guarantee that we make another 50% in the next 2.5 months, I will do my best to achieve positive returns. This strategy has outperformed buying and holding Bitcoin for more than 4 years now. And I don't see any reason why it shouldn't do the same using perpetual futures instead of borrowing and lending platforms that we used in the past. A link to Premium should pop up directly over here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.